Hello everyone, and welcome to today's intraday video that I'm recording on Friday, October 8th, more or less in the middle of the session in the US. What's happening today is truly profound, and I want to explain why is it profound. At the moment of writing these words, gold, silver, and mining stocks are up in today's session, but the price levels that have been reached are not really that important, at least not the price levels that we have right now. What is important is that we saw a major reversal during intraday's session. Well, of course, during the session. And what is important is how markets responded to the bearish or actual negative jobs report. So the report was well below expectations, which might make people believe, that would be relatively normal. It might make people believe that the Fed might not taper, or it might taper later. So it would be theoretically bullish for gold. And so gold and the rest of the precious metal sector rallied initially. And the key word is initially. You can see it on the chart over here. There was a significant intraday rally that seemed to be a game changer. But it wasn't, because gold declined once again. It's now trading well below its recent intraday highs. What happened? Well, nothing happened except for that gold wasn't in an uptrend. That's just a counter trend movement. Some might call it dead cat bounce. Some might call it corrective upswing. Some might call it a pullback during decline. No matter how you call it, it's not a real rally. It's a fake move higher. It's a trap. And that's what we saw today is the perfect confirmation of this taking place. Think about it. If gold was about to rally right now, okay, it would react in a remarkable way to just any bullish indication. And it just got this extremely bullish indication. Well, on the face value, it was extremely bullish. And it failed to rally. It failed to hold the gains. The bearish forces overwhelmed buyers. Okay, this is a clear confirmation that the big move is to the downside, and we're in it right now. Now that's as far as gold is concerned. Next chart I have for you is silver, and in today's text analysis I wrote that it's a tough call to say how high silver would move, but move above 23 would not be out of the question. And guess what? We actually saw a move slightly above $23 before silver declined once again. And at the moment of not writing these words, but recording these words, silver is well below its August lows in terms of the daily closing prices. So nothing bullish here. And the fact that silver moved sharply higher makes it only more similar to what happened before the preceding big declines. Okay, that's history rhyming. And that's a very bearish rhyme, I have to say. Mining stocks. Maybe GDX is more bullish. No, it isn't. It is trading above the $30 level, right? At the moment of recording this, 30.72. Actually, that was when I created this chart, so several minutes ago, about 11 or so. But the point here is that it's not above its previous lows in terms of the closing prices. It will be most important to check where GDX closes the day and also the week, as it's the final day of the week, of course. But right now it's below it, below both lows. So that's not an invalidation of the breakdown, that's still a verification thereof. And given the reversal that we saw in gold, it's pretty unlikely that we'll see more strength today. So the next big move in gold, silver, and mining stocks is likely to be to the downside. No wonder the USD index didn't, despite the attempt, didn't break below its very short-term uptrend, and it's a strong uptrend. It's this dashed line. So what we saw this month so far is a consolidation that is after the breakout above the previous resistance line and the previous yearly highs. So that's a very bullish setup. The USD index proved to be able to withstand the bearish forces. It didn't decline back below the previous yearly highs. So it seems to be ready to rally once again. And as it does, the impact on the precious metals sector is likely to be very bearish. So the short positions in the precious metals sector are likely to become more profitable profitable or more profitable depending on when one entered them in the following weeks and months. All right, so I hope you enjoyed this intraday analysis, and I encourage you to sign up to our free trial or subscribe to the to my gold and silver trading alerts, and to subscribe to the YouTube channel that we have. Thank you, and enjoy the weekend, and signing off. Oh, finally, on a final note, nothing that I said should be viewed as investment advice, is just my general opinion. Please read the disclaimer below this video. Thank you for watching. Bye-bye.